Hello and welcome to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, accumulate, and obviously enjoy more money. Today I want to talk to you about something that's becoming the scourge of modern life, and that is consumer debt. Now I'm not talking about loans to buy assets like mortgages to buy houses or commercial buildings, which I think I would call good debt, but credit to buy depreciated items like consumer goods and cars, TVs and furniture. There's even a company that sells furniture on loans, basically on sort of hire purchase, and they'll sell you a Sony PlayStation or a fridge or a washing machine, and the interest rates are ginormous, and it's become so ridiculous that even the government have looked into this. But so that's what I'm talking about, is consumer debt that people use to buy things that are basically depreciating as soon as you take them out of the shop or off the forecourt. And now, whatever the reason for getting into debt, if you want to live without worry and fear, it's vitally important that you get out of debt fast and stay debt free forever. Now this applies to companies as well. If you're investing in the stock market, for instance, or buying companies, you don't want to buy a company that's riddled with debt. This is what brought down Carillion, for instance, and many other companies that go into bankruptcy, or in America Chapter 11, because they've got they're burdened with all the debt. So, but I'm talking about the individual now and debt. Now I've got for you 10 tips to get out of debt and stay out of debt for good. Now, first of all, what you need to do is prioritise your debts in order of importance, cost of servicing the debt. Now, obviously, prioritise things like keeping a roof over your head, for instance. Like if you've got a mortgage or you've got rent to pay, there's no point in paying off a credit card bill when you haven't paid your mortgage and you could lose your house, or you haven't paid your rent. So that sounds obvious, but in my days of financial services, people would often pay the creditors that are shouting the loudest. So whoever's banging on their door or has sent bailiffs down, they'll pay those rather than pay the mortgage company, which may not be so quick off the mark to chase them. But you've got to prioritise it in terms of that, but also prioritise them in terms of the cost of the cards to clear the debt. Obvious again, look at the card paying the highest rate and clear that before, and pay more of that off than the lower rates. Now, clearing the cost of high cost debts will give you breathing space to pay the other loans faster and really then be able to live and keep a roof over your head and keep electricity and your utilities coming into the house. Now, all this sounds a bit obvious, but it's surprising how people can get into a muddle because they've got letters coming in which they don't even want to open. They've got all these letters, and they can see, you can look in the window, and I've done it myself, I've been there, and you look in the window and you see all red, and you don't want to open it, and you know who it's from, and you know that they're chasing you, and that they're going to be starting taking legal action and that sort of thing. So you've got to look at that, and then take an overview of it. Don't just sort of jump from thing to thing. Some people go to debt counselling, like the Advice Bureau, the Citizens Advice Bureau they used to be called. Some will take on these companies. I'd be a bit wary of these companies that really get you to enter into arrangements with creditors that are sometimes called voluntary arrangements, that are nearer to bankruptcy, if you like. So just be careful of those, because it could ruin your credit rating. If you can get away without doing that, the better. And also these companies do charge high fees as well. But that's another story. That's a regulated area. Now, second tip then is to slash non-essential outgoings. Now, again, this sounds obvious, but go through your standing orders. Get your bank to print them out. If you haven't got it online, get your bank to print them out. And I've done this regularly myself. I go down the bank, print out my standing orders, print out my direct debits. Direct debits are different from standing orders, of course. You might have both. And look down them and see, why am I paying this? And sometimes you'll find that you're paying for things that you shouldn't even be paying for. I recently found a debit going out for through my mobile phone company for something that they'd allowed to go through, and I'd been paying it for 9 months, and I think it might have been a charity donation that they've been taking money out of my account on through the phone bill. and they stopped it, but they wouldn't give me the money back, but they stopped it, but that was after 9 months. And it wasn't a fortune, but it pays to look through your statement and see what's going out. Things like, let me see now, Sky TV or subscription TV, or maybe Netflix that you never watch. I mean, Netflix is not a lot of money, but all these things can add up. Membership of the gym. How often are you actually going to that gym? I've had 2 memberships of gyms go down at one stage. Maybe if you can't afford the gym, exercise at home. Go for runs. Go for long walks. Buy a set of little weights off eBay or whatever you want to do. Buy a bike instead of going to the gym to cycle on a static thing. Go and buy a bike. So that's one thing you've got to look at. Is look at those non-essential things. And if you go through your standing order and direct debits, you'll be very, very surprised at things that you're paying for that you may have just forgotten about. And a lot of things like trial offers. Get this free for 3 months, and then in the small print. But after that, it's then £20 or £30 a month. Now the same applies to your credit card statements. Look at those as well. They can be a little bit more difficult to stop payments going out. You might have to get back to the company, but that is another killer. It's so easy to sign up for trial offers on a credit card or buy things online that involve a monthly payment. It could be subscriptions, it could be memberships of clubs and organisations. Look at those as well. They can add up, and obviously you're paying interest then on the payment that you're making if you're not clearing off your card every single month. So that's a very important thing to do. Number 3 then is to make a plan to start paying off your debts and then stick to that plan. Now, one thing a lot of people don't realise is that when you pay off a credit card, you'll see, that they'll send you a statement and they say, here's your balance. It's for £5,000. The interest charge this month. This is your expenditure this month. And then at the bottom it will say minimum payment, which we take by direct debit. And I hope you are at least paying the minimum payment by direct debit, because if you're not, you can easily run into late payments with those. So if you're just paying off the minimum payment, depending on the interest rate you're charging, it can take maybe 10 years to clear that debt. 10 years. If you left it alone, never spent anything, and this will vary according to the interest rate that you're being charged, but it can take years and years and years to clear the debt if you're only paying the minimum payment, because the minimum payment might be, say, 3% of the debt, but then the interest rate might be 1.8% per month of that. So you can see that it might not get cleared off for a very, very long time. So if you find that you've got one credit card and that's a high interest rate, maybe and they're all about 16, 18, 19, 20, 29% interest rate. When you consider that base rates are only 0.5%, it's an incredible margin that they're making on the rate. Now I remember when rates, mortgage rates were like 12%. And the credit card ratings were maybe 19, 20, 24%. Well, they're still about that level now, even though rates are now a fraction of that 12%. They've gone all the way down. It was 0.25% at one stage, base rates, and mortgage rates are now typically 2-3%. So it's gone all the way down, and yet the credit card companies are still literally creaming it in on interest rates. Warren Buffett said, borrowing money on a credit card to buy consumer things is dumb. But he likes credit card companies. He buys credit card companies that basically, he didn't say this, but basically lend out money to people who, I won't say dumb, but people who borrow money at 16 to 20% to buy consumer goods that will be worthless in a few months or a year's time. So you've got to get to a stage where you're paying these off and paying more than just the minimum. Now you can do this automatically. You can set that up with your card company so that I want to pay, let's say your minimum payment is £20 a month. You can say, well, I want to pay £50 a month. Or you can pay off in between those debits going out automatically, the direct debit payment from your bank to the credit card company. You can just walk into the bank and make a payment over and above that. Now, for instance, if you've got credit card debts of £10,000 and you've got £20,000 sitting in the bank earning 0.25%, it might make sense to pay some of that credit card debt off, because that's costing you a lot more than the money in the bank is earning you. However, I know that people like to have that security of money in the bank. Now, I wouldn't suggest wiping out all your savings to pay the credit card off, and it's nice to have money there to do deals, like property deals or whatever, if you've got deposits available and that sort of thing. But You know, if you're just keeping that money there for years doing nothing in a deposit account, maybe earning just over 0.1%, and then you've got credit cards at the same time charging you, more than that every month, or charging you 18 to 20% a year, it makes sense to perhaps clear that down a bit, clear some of the debt down. But if you haven't got that capital to do that, make a monthly repayment. I would list out all your debts on a spreadsheet. If you can't do spreadsheets, just write them out. Right, this is what I owe, this is the monthly payment, this is the interest rate they're charging, and then I think it will all become a little bit clearer. You can then see, you've got a picture. You know, it's a picture it in my mind, or I can't see it. You know, look at it in a visual basis, and then you'll see what's going out, and it might surprise you. It might shock you as well. But try and do that. List all the debts, and then that's the first step, just to see what is going out, and then you've got to make a payment plan to start paying that off. Now, you may have to forego some of the things that you're spending on. I mean, are you, for instance, going out and buying 3 cups of Starbucks every day? I mean, could you just go to work and make a cup of Nescafe, or could you, make some coffee at home and take it in one of those cups to work? Because if you're paying, say, £6-7 a day on coffee, I mean, some people could be spending £10 a day, 5 days, it's £50 a week. That's £2,500 a year. That could be clearing off your credit cards, and that will save you money. Because if you look at what you're paying out on your credit cards, that's all dead money, isn't it? If you're paying, say, £50 a month just for interest on your credit card, you could be using that for other things. You could be saving that money. You could be enjoying that money in other ways rather than just paying that off. And you've got to stop this indiscriminate spending. I know it's easy to spend on a credit card because for me, I see 2 shops, and one doesn't take cards and one will only take cash, and I'm more inclined to use the shop or the takeaway that will take my card, because it's less painless, isn't it? It's taking money out of my wallet and spending it. It's almost like I'm losing something. It's painful, but using a card, especially with these, just touch the machine, it's gone, isn't it? You don't even think about it. It's painless until you get the bill on your card. So you've got to stop that and then start making a plan to repay those debts. It's imperative that you clear down those debts. So that's step number 3. Now, step number 4 is, if you're swimming in these debts and you've got a load of cards that are just costing you too much, there are cards that will charge you a lower rate if you transfer the balance to them. Now, it is a short-term measure, and it's not going to work in the long term, because they might give an interest-free period or a low interest rate period for a certain time. It could be 9 months interest, 6 months, or maybe just a permanent low rate. Now, some of these card companies will give you a lower rate to a new borrower than they are giving to their existing borrowers. So look at those. Some of them are giving a 0% card balance transfers. Now, the reason they're doing that is not to do you a favour, but it's to get your money in, because they know that most people will transfer. They'll get 0% for 6-9 months, and after that they'll be then charged the going rate for that card. But if you need that breathing space, and you can do this and move your money over there, and that stops you, that means you're not paying out that £50-80 a month. If you can use that money then to start paying off the debt, it can be helpful. You've got to watch out for the balance transfer fees, however. Some can be as high as 3%. So they might say 0% interest, but there's these balance transfer fees. Others might say, well, we'll charge you 5%, and you might be paying 15% over here, but you can move it there to pay, say, 5.9%, but with no balance transfer fee. So you've got to weigh it up and see what works best for you and who is offering you that money. You can find these things on the internet as well. Sometimes you'll get something in the post, and you can just get the card, ring them up, and do the deal on the phone. But that can obviously give you that bit of breathing space. It's not a permanent measure, though. So that's step number 4. Step number 5 is to you earn a bit of extra cash, really. Then you've got that money to pay that off. Now, this is another obvious way of reducing your debt, is to just increase your income. Now, you could achieve this in a number of ways. You could get a part-time job. You could start a part-time business working from home. You could do some internet marketing, Amazon trading, or whatever. Or just go out at the weekend and find something that you can do that will earn you a bit of extra money. and then use that money to clear down your debt. It could be working extra hours in your job, or increasing your skills, and maybe doing a bit extra and impressing the people you work for, so that you can get a pay rise, or a higher paying job, or a promotion. Now, I wouldn't suggest going into your boss and saying, look, I've got this debt, and Charles Hurley said I should ask for a pay rise so I can pay my debt, because the guy might say, well, what's your debt got to do with me? Why are you bringing your problems into me? But if you go in with the attitude of, look, I've been doing all this extra work, I think I can do this and this and this that will make the company more money, and I'd like to take on that extra responsibility, but maybe in return I could get a bit of extra reward, something, a bonus or a pay rise, because they're thinking, well, if they're giving you a pay rise, what's in it for them? I know that you're already working for them, and you might be working very hard, but they might not see that. They might say, well, he's just doing his job, why should I pay him any more? But if you go in and put a case together and say, look, I'm doing this, but this is earning extra money, I'm doing that bit of extra, I'm staying behind late, I'm coming in early, I take work home, I think I deserve a bit more. Maybe you can earn yourself a pay rise, or maybe if you can't, you might consider getting a higher paid job. But in any case, I'm saying, yes, you can do all you can to repay your debt, but sometimes you might need to just have a bit more money coming in, increase your income to pay those debts that are around your neck. And the income increasing thing you can do anyway, whether you've got a debt or not. So that's number 5. Number 6, check if you're entitled to any benefits or tax credits. This would apply if you're in low paid work, or a single parent, or you've got kids and this sort of thing. Now, it's it could be benefits, it could be tax breaks. I'm not an expert in universal credit. You may need to get advice from the Advice Bureau, or just look it up online to see what you're entitled to. Now, you can check things out for yourself. It doesn't mean that you're a burden to the state. If you're entitled to these things, if you're on low pay, then why not have them? It doesn't mean that you're sitting around doing nothing. It just means you're working, but you're sinking a bit, and you might need a bit of extra help for a time until you can either earn more money, or just get yourself out of debt. I definitely take advice on this. Some people are even using food banks. I don't think there's any shame in this, and you shouldn't be. If you need to that extra bit of help now and again to get you through a difficult situation, I would definitely look at that, and see what you're entitled to, and what you can get to give you a bit of help. Again, the government website or Citizens Advice are a good place for that. Number 7 is never ignore a bill or a demand, especially a debt collector or a court letter. I know there's a tendency to sort of bury your head in the sand, and you have all these unopened letters, and this is, they've been into people's houses and found that there's hundreds of unopened letters. And when I was a financial advisor, I was talking to people and say, well, I just can't open it, I can't face it, I just can't face these letters. And when I also worked in a bank, we had people that were basically the same people that were in trouble with their accounts all the time. They seemed to be constantly in trouble, often through overspending, indiscriminate spending, but sometimes just for no fault of their own. But they were constantly in debt, and they somewhere along the line they needed some help. But you cannot just ignore letters and bill, because they will ultimately lead to things like county court judgments, or CCJs, or defaults. And they can stay on your credit file for up to 6 years, and that can really destroy your credit rating altogether. You won't be able to get a bank account very easily. You won't be able to rent a room or a flat very easily. You certainly won't be able to get a mortgage easily, or get other forms of credit. A county court judgment is where a company, they've asked you to pay, you won't pay, you get a letter from them, then you get a court letter, and they say you are summoned to go to a court hearing. You can defend the case, obviously, but a lot of people will ignore it and do nothing. I've been owed money, and I've sued people through the county courts, and a lot of people just ignore it, and they just never pay it. Even if you get a county court judgment against somebody, it doesn't mean that they have to pay it. You then have to take further enforcement action through bailiffs. But a lot of people won't pay it, but they don't realise that they're then getting a judgment registered against them. Now, if you don't know what that is, I suggest go and check out your credit file. There's various ways online that you can check your credit file. You can go direct to some of the credit reference agencies like Experian, Equifax, and they have to give you a copy of your credit file, maybe for a small fee. There's companies that will do it. I think you can get a free check. You can pay to get a check, and you can do these online usually. And then you will see exactly what is on your credit file, and you'll be amazed that they'll show what you owe in each credit card. They will show if you are a late payer, if you're constantly missing payments, and this can be done if you're not paying by direct debit, bills by direct debit, because you might say, well, I'll pay it on the due day and go in and send off a check or go into the bank to pay it, but actually technically you're late, because by the time that payment has reached the lender or the credit card company, you've passed the due date, so they can mark you down as a late payer, and that's all on your credit file. So that is a good step, to just get a copy of your credit file, and also see if you've got any bad things on there, like county court judgments. The other one is a default. Now, this can be issued by a credit card company without going to court. They just write to you and say, look, you've got to keep paying. If you're not paying your bill, like your credit card bill, they can eventually take the action and say, now you're now in default and we've issued a default against you. Now, default is as ruinous as a county court judgment, and that will stay on there for 6 years as well. And there's very little you can do about it. It's quite a serious one, because you haven't got much time to sort of go to court and defend it. Now, if you find on your credit file that you've got anything that you were a bit surprised about, perhaps you've moved address and somebody has registered a judgment against you, you can take steps to get that set aside, and then have effectively a retrial to see if you really owed that money or not. But definitely check that credit file and keep your credit clean. This means never missing a payment, never been late with a payment, being honest with creditors, and if you borrow money, being honest with it. I know it's easy just to say, well, I'm going to go bankrupt, as a lot of people do, because you can be discharged within 2-3 years or whatever it is. But that stays with you. On every form you fill in, they say, have you ever been bankrupt? Not have you been bankrupt in the last 3 years, have you ever been bankrupt? And if you go for a mortgage, it's there permanently. So try and be honourable with debt, and if you're going to borrow money, feel that you're going to pay that back, and don't just take people's advice and say, just go bankrupt and you'll wipe out the debt. Yeah, you will wipe out the debt, you won't have to pay it off, but there's a lot more consequences to going bankrupt than you think, and certainly there's a lot more consequences to county court judgments and missing payments. Now, some people can't avoid bankruptcy, obviously. If the debt has become huge and too huge to ever repay, then sometimes it is necessary to take that action. And lots of celebrities have been bankrupt in their time. I mean, Donald Trump has been into a form of bankruptcy, Chapter 11 in America before. Lots of stars have got into bankruptcy before. But I wouldn't go bankrupt for, say, a £5,000 or £10,000 credit bill, or a £20,000 credit bill. If you owe hundreds of thousands of pounds through some business transaction that went wrong, then take advice on that. But I certainly wouldn't go bankrupt just for a silly little debt. And you'd be surprised, some people have made themselves bankrupt for a few £1,000s, sometimes out of just sheer bloody mindedness. So, well, they're not going to get the money from me, so I made myself bankrupt. And they don't get it. I've stuck 2 fingers up to them and they're not getting the money. I'm bankrupt now. They can't touch me. Well, is that really good attitude? Not really. I don't think so. So that's going back to the advice. I slightly deviated there, but never ignore a bill, and especially those bailiffs knocking on your door. That's a serious thing. You don't have to let a bailiff in, by the way. If they say, "Can I come in?" My advice is not to let them in the door, but you certainly can't ignore it. If it gets to that stage, you're already starting to pay charges for the bailiffs, like a parking ticket, for instance, can. A £50 ticket can end up running into thousands of pounds by the time they've gone to court and issued penalties and then bailiffs and that sort of thing. It can easily ramp up to hundreds, if not thousands of pounds. So don't ignore these things. Get on the phone and deal with it. But a little side tip there, don't let bailiffs into your house, because then they start marking up things that they can take away the next time. Okay. Number 8, then, getting on from not ignoring a bill, but speaking to your creditors if you're having difficulties. I think you've got to communicate with people. If someone owes you money, and you're asking, well, you're phoning them up and they're ignoring your call, and you send them a text, can we talk about this, and they ignore it. How do you feel? You think, well, maybe they're ignoring it because they're scared to speak to you because they haven't got the money to pay you back. But it's the same thing with companies. When you owe them money, they want to hear from you. So don't keep ignoring them. And this is especially true on mortgages, because if you're behind with your mortgage, you don't want to get into a situation where you start going to court, because immediately you go to court, then there could be a solicitor's bills and court charges that are nearly as much as a month's payment on your mortgage. So don't ignore things. If you're having difficulties, you've got to speak to people. You've got to call out, so I'm having difficulties. A lot of lenders will have these automatic numbers. If you're having difficulty with mortgage, press this number and just go through and speak to them. Number 9 is ask for help. Now, this could involve Citizens Advice. I think it's just called Citizens Advice. It used to be called the Citizens Advice Bureau now, or an independent counsellor, or just someone you can sit down and talk to that knows a little bit about it. We all need a bit of help from time to time, and being in debt can be lonely, depression, lead to depression, and even suicides in some cases. So don't let that get to that bad situation. Don't let it get that bad. Ask for help, call out for help, and sit down and maybe do the exercise I said in the beginning, to lay out all your debts and see which ones can be dealt with, and what you've got to do first. And sometimes it might involve talking to all of your creditors and saying, look, I haven't got the money to pay you, what are we going to do about it? And sometimes they might agree extending things, or extending the loan for a longer period if you've got a fixed term loan. There's also things can be done, because they want to help you to get their money back, if you like. So they don't want you to go bankrupt, and they don't want to make you bankrupt. It costs them money as well. So you've got to talk to people and try and sort things out. Don't just let it fester and fester and get worse and worse and worse, because all the time the interest is mounting up, and interest on interest, or compound interest, is what Albert Einstein called one of the most powerful forces on earth. It can work in your favour, but it can work against you as well when it comes to debt. Now, number 10 is to stay out of consumer debt for good. Now, this is the prevention better than cure, really. Never borrow money on expensive consumer items which depreciate in value. Avoid rip-off deals like rent-to-own products, like the plague, I'd say. It's the old adage: if you can't afford it, do without it. That sounds a bit old-fashioned. It probably sounds like your granddad. If you can't afford it, don't. You can't have it. You never borrow, and that sort. But it's true. We've become accustomed to this. I want it now, buy now, pay later, or it's Christmas is coming, so I've got to borrow money for Christmas. That is ridiculous. Christmas doesn't have to be a load of expensive toys. You can enjoy Christmas with the kids without blowing your money and paying it off till the middle of next year. That is really nonsense. And companies, of course, prey on people, particularly in poorer areas. You've got people that will basically lend you money for consumer things because they know you're under pressure to buy toys for the kids and that sort of thing. But just don't do it. If you need things, go on eBay and buy things second hand. There's a huge market out there for second things. I know some very, very wealthy people that I've seen rummaging around in second-hand furniture shops that they use for the flats they own. And I said, what are you doing here? You're a multi-millionaire, but this is it. They're canny as well. They're clever. They don't always go out and buy new. And the second-hand market for things is incredible, because something that you've got new today, tomorrow you'd be surprised it's probably only worth a third of what you bought it for. And you can pick these things up yourself on eBay and all sorts of sites that sell secondhand stuff. So you don't have to buy new. Clothes as well. You can find some fantastic clothes in charity shops. And this recycling is a big market now, particularly for furniture and consumer goods. So you don't have to go and rent stuff like basic furniture and white goods. Do that. Go down the laundry, the laundrette, and don't get into debt over these things, because these companies really do. They set themselves up in poorer parts of town, they prey on people that are perhaps not as financially educated as everybody else, and and can't get, that they haven't got the access to cheaper credit, so they prey on these people. So to just avoid that in like the plague, really. And I mentioned this in my forthcoming book, Yes, Money Can Buy You Happiness, in more detail. But I think the points here might sound a bit obvious here, but I'll just run through them once more. Prioritize your debts in order of importance and the cost of servicing the debt. Number 2, slash your non-essential outgoings, all that silly spending, all those takeaways. Don't, if you can't afford lunches, bring your sandwiches into work in your bag. Stop that 3-4 cups of expensive coffee a day. Maybe stop going out to the pub so much. And just slash those non-essential outgoings. You don't have to become a hermit, but just slash the non-essential outgoings. And in particular, go to your bank and get that list of your standing orders and direct debits and your credit card payments as well. Make a plan. Number 3, make a plan to start paying off your debts and stick to it. Number 4, get a balance transfer card if you need to sort of relieve the pressure for 6 to 9 months. Number 5, earn extra cash, generate some more money. So if you're spending more than you earn, then start earning more than you're spending. And this can be done in a number of ways that I've gone through. Number 6, check if you're entitled to any benefits, tax credits, food bank, whatever it is. Don't be too proud. Go and get that help that you need to get you through these difficult times. Number 7, never ignore a bill or a demand, especially from a debt collector, court letter, bailiffs, all that sort of thing. Never ignore it. Don't bury your head in the sand. Open those letters. And this leads on to the next thing is, speak to your creditors if you're having difficulty, and don't just hide from them, because eventually the court actions and the interest will just ramp up, and you'll be in more and more trouble. And that leads on to the next point, number 9. Ask for help, whether it be Citizens Advice or the National Debt Helpline, or just a friend or a relative or somebody who is financially aware, or even going to your bank and talk to them about it if you can get to see somebody in the bank that might be able to help you. But definitely ask for help. And number 10 is stay out of consumer debt for good. Don't borrow money for consumer things that are depreciating in value. Only borrow money for things like buying assets that will go up in value. And don't worry about keeping up with the Joneses. Just live your own life and do your own thing your own way. Now I'm going to give you a couple of bonus tips here, just for listening in to the end. First bonus tip is never use payday lenders. These are a particularly bad form of lending, and unless you really do have no other choice, and especially these unauthorized doorstep lenders will charge you a small fortune in interest. These are what's called loan sharks. Payday lenders are known for, if you've got it's cashing that payday check. So someone's got a check, they can't get the money for 3 or 4 days, so they go to a payday lender and they'll give them the money now, but they're going to charge them 5, 6, 10% for that money. And these will include pawnbrokers, also another very expensive last resort form of lending. But if you have to do it, you have to do it. And the second bonus tip really is to start building your credit rating up, so you then have access to better interest rates, better deals. Now, you can do this in a number of ways. One of the ways is to clear your credit cards faster. And once you start clearing your credit cards faster and you haven't got such high balances, then you'll find that you'll be offered cheaper deals, cheaper credit cards, and you'll have access to more credit, basically. Now, you can get personal loans, for instance, if you've got good credit ratings at incredibly low rates, 4 or 5%. But you can't get that if you haven't got a very good credit rating. Another way is to make sure that you pay your bills on time. As I said earlier, have your bills paid by direct debit if possible, because it takes the memory aspect of it. It doesn't mean it takes that error aspect out of it where you can just forget to pay a bill and then you're late, or you forget it, and then they're sending reminder letters, and then they can register that at the credit reference agencies, and then you're a late payer. And a late payment can actually stop you getting a mortgage. Sometimes lenders will say, I'm not going to lend to this person because last year they were late paying their credit card bill for £50. I mean, it is that crazy. So don't get into that situation. Make sure you keep on top of things all the time. And one way of doing that is to have direct debit. So your credit card, don't just rely on paying it yourself. Have at least the minimum payment going out by direct debit, preferably a bit more than the minimum payment going out by direct debit every month, so you don't forget or go on holiday and just forget about it. So and basically, I mean, the higher your credit rating, the more access you'll have to cheaper finance, and unfortunately, the lower your credit rating, the more expensive your credit. And unfortunately, it's always been the same. You know, the poor seem to pay more for their credit. They pay more for their electricity with these cards and that sort of thing. These meters, these charge meters. You're paying more for your electricity in that way, and you know, they even pay more for their food because they perhaps haven't got cars. They can't go to these out of town supermarkets. They end up going to the local store and paying more for everything. And when it comes to borrowing, often borrowing on the doorstep, they're just paying more and more for everything. But that is the way of the world. You've got to get out of that situation and get out of debt. So I hope that's been useful today. This has been Charles Kelly bringing you money tips. Thank you, and hope to see you again soon, and keep out of debt.